Bandhan Mutual Fund presents MF Corner.
Hello, welcome. You've tuned into the special edition of MF Corner, YouTube edition. So thank you so much for tuning in as always. And we are on a journey to explain you mutual funds, different kind of mutual funds, as well as talk to you about the difference between PMS fund, AIF, as well as mutual fund today. That's going to be important, right? What is the option that is best suited for you? Now, to talk to us about all of that, we have Nipunn Madan, who is the joining in it from 3i FinServ LLP. Thank you so much, Mr. Madan, for joining in with us on the show, and it's a special edition where we want to educate our viewers about mutual funds and different categories that are there as well, and what they should be focusing on. Today we are discussing PMS difference versus AIF, alternative investment fund, as well as mutual funds. Mr. Madan, if you know, let's start by just explaining us the difference between the three of these briefly. What is it that are the key points that differ all these factors in terms of PMS, AIF, as well as mutual funds?
Hi, good morning, Vinnii, and thanks for having me in the show. So basically, all of three are investment vehicles only. And if you see mutual funds, it's a highly regulated vehicle by SEBI. And it provides us liquidity, diversification, and it's basically accessible to most of the people. It's like broad range of investors from retail to HNIs. Whereas PMS goes, it's basically more of a customized type of approach where you want to have your shares in your own demat accounts and a portfolio manager managing your funds. So more of a concentrated and actively managed type of product. Whereas AIF is alternate investment funds is basically for sophisticated investors. So who wants to invest into like non-traditional asset classes like private equity, VCs, unlisted securities, and more or less AIF is structured like mutual fund, but having a longer lock-in periods. So overall, if you see want a more of a standardized type of product, then mutual funds are the products, whereas PMS is more of personalization and AIF is more of exotic class investments. Okay,
right. So can only specific kind of investors invest in these different products? Is there some threshold in terms of wealth or risk appetite? Who should go for a PMS, who should go for an AIF, and who should go for a mutual fund? You did say AIF is people who have want to go into that private equity side and other forms of assets. So any more differences in terms of wealth threshold, risk appetite, as well as specific investor goals?
So basically this choice depends upon investor's portfolio size and what is his risk appetite and what is his objectives. So if you see mutual funds, so mutual fund is suitable for everyone. Say a person who wants to invest a 250 rupees SIP, or an HNI wants to invest 50 crores or 100 crore rupees. So mutual fund is the product for them. Whereas PMS is more or less suitable for HNIs who wants like little outsized returns, concentrated portfolios. So PMS is suitable for them. Whereas AIF is by its size, like you need at least 1 CR to invest in AIF. You need to be ultra HNI. So let it go like this. If you are a retail investor, it has to be mutual fund. If you are HNI, you can add PMS to your kitty. But if you are ultra HNI and you want some outsized returns and you want to invest into exotic asset classes, then what you can basically do as an ultra HNI, core thing that you need to keep in mutual fund, and satellite type of things you can add into your PMS or AIFs. But core has to be like mutual funds, basically.
Okay. Core has to be mutual funds. Then depending on your wealth, obviously you can go in for other options as well. That's a word coming in there. Mr. Madan, which other options in these options that we've seen, PMS, AIF or mutual funds, have historically delivered better returns, risk-adjusted returns that you look at it? Is there some trend that we specifically see that one of these categories has actually managed to outperform the others? And given specific market conditions, like today when you look at the markets, they are so volatile right now. So has there been any trend on that front as well?
So as far as risk adjusted return goes, then leader has to be mutual funds, because what they have, like flexi cap funds, which are highly diversified, and something like multi asset or balanced advantage fund. So they are highly diversified and fully liquid. So if you see risk adjusted returns, then mutual funds have delivered better returns. But as far as PMS goes, they seems to do well when there is a bull market. We have seen in last 3 years, PMS, lot of PMSs have come up and they have done decently well. And they basically, when they are investing to small caps, micro caps, they bound to do well in bull markets. And AIF is basically, they have a lot of potential because they are investing into some uncorrelated assets like PEVC. But sometimes liquidity is a concern. So as far as risk adjusted goes, then it has to be, crown should go to mutual fund.
Okay, risk adjusted return, it should go to mutual funds. But there are often some claims that say PMS or AIF gives superior returns. Why? Because they're actively managed, right, by more professionals. So because they're actively managed more on that front, is there data to support that front?
So as far as professionals goes, a mutual fund, like if you see the experience of fund managers of mutual fund, no one can beat them. But some PMS strategies have beaten mutual funds over pockets or basically specific time periods, as I explained earlier, also during bull market phases. But over the long term consistency, I haven't seen anyone over the long term overtaking mutual funds. I haven't seen that.
Okay, so long term, obviously, mutual fund wins comes at first place, right? Because they're managed also, professionals managing it, the experience that comes in as well, and more settled in terms of over a period of time. Given that you were mentioning also, like you can go for SIP route, there are other routes as well which come in for mutual funds.
So basically, what used to happen, like I have seen a few months back. So PMS and AIFs has been seen as guaranteed tickets for outperformance. It's not like this, because they tend to outperform in bull markets. But over the long term, as far as consistency goes, I think mutual fund still remains the number one, because it gives you peace also.
Okay, peace plus consistency is what you want, right? Whether markets are up, down, at least that consistency is what you're watching out for. In a bull run, yes, surely PMS and AIFs, something that lead the chart, but consistency over a longer period of time, Mr. Madan is highlighting that yes, mutual funds win the crown. But Mr. Madan, what I want to also know, now today, if investors sometimes ask us, I have 50 lakh rupees to 1 crore rupees. I want to invest in options that they want. What could they invest in? Out of the three, how would you tell them to invest their money? If it's ranging between 50 lakhs to 1 crore, what portion should go to mutual fund? And AIF is like you're saying 1 crore is minimum that is required. So then how should they divide their money?
So basically, now again, it depends upon the size of portfolio. So if you have only 1 crore, obviously you should opt for mutual funds only. But if your size is like 20 crores, and then you can, like I explained earlier, you can invest 10-20% as a satellite strategy in PMS or AIF. So if you are a conservative or moderate type of investor, you should only opt for mutual funds. And if you are an aggressive investor, then you want a concentrated bet, or you want invest into unresearched stocks, then PMS you can add, but you need to have a decent portfolio size. And for sophisticated investors having 20-50 crores of size, they can invest into AIF. But for an investor having only size of 50 lakhs to 1 crores, I think they should opt for mutual funds only.
Okay, opt for mutual funds only. And just, reiterating one last word coming in from you, given that, we're seeing growing popularity coming in for passive investments, and does PMS or AIF specifically make sense for ultra high net worth, like you've said, HNIs and ultra HNIs, or mutual funds are also a good choice for them right now?
So passive has changed the picture globally. If you see US, these passive investments have done extremely well. So as far as PMS and AIF goes, these serve different purposes basically. PMS, if, as I explained earlier, if you want to invest into under-researched stocks, the stocks where even mutual funds cannot invest because of their size. So PMS serve to those people, whereas AIF if somebody wants to invest into uncorrelated assets, so they can invest. So all of them having a different purpose, then depends upon their risk appetite. If they can bear the risk, or they can see this illiquidity in their portfolio, then AIF also serve the purpose. So all of them have different purposes, and they serve to different people basically.
Okay, Mr. Madan, thank you so much, for joining in with us on the show, explaining our viewers difference between PMS, AIF as well as mutual funds, and who could opt for what. So that is important to know as well in the current market scenario. Thank you so much for that and giving us your time as well. And thank you so much, viewers, for tuning in to the special edition of MF Corner on YouTube.
Bandhan Mutual Fund presents MF Corner.